Thank you everybody for joining us today. This is the last one in this year's series because it works on financial years, of course, of our Joining the Dots webinar series that various of people in the road safety sector have been joining in. If you would like to catch up on any of them, they are available on YouTube. We can make sure that we put the link into that in the chat so that you can have a look at some of the previous topics that we discussed this year. There's been lots of really great informed debate. This is the first one that we've done after our national Joining the Dots conference, and I can see from the attendees they're here. A lot of you we got to meet in person at that event too, so I really hope that you enjoyed that event that we had in Birmingham, and we're already thinking about planning for next year, and hopefully there'll be a call out for anybody that has any topics or any presentations that they'd like to cover at next year's meeting, wherever we host that. Okay, yeah, so today's webinar is going to be talking about road safety and the insurance sector. And this is something that I think many of us have come across in discussions, in roundtables, in various meetings. What we're going to try and do today is get some experts in to talk to us about what's already happening within road safety and the insurance sector. So joining us on the call today, we have two special guests, Sarah Vaughan from Angelica Solutions and Katie Thornley from Acorn Insurance. They're going to be leading the presentation. That'll probably take us around half an hour, maybe a little bit longer, maybe a little bit less. And they're going to be outlining some, which I'm going to show you in a minute on the next slide. We also have Jamie Hassell from PACTS, who's going to be joining the panel discussion as well. I've been speaking to Jamie quite a lot about insurance and the link within road safety for many years now, but definitely much more intensively. And he's going to mention some plans that he's got for engaging in the sector and thinking about how we can really link up this effective private sector group of companies and those of us, the majority of us that are on the call, that represent the public sector. So webinar should last around an hour. We have the dedicated QA section. So if there's a specific question that you would like to ask the panel, maybe you already have some ideas in mind already, maybe it was something that you hear from the presentations, please do put that in the QA. Separately, we also have the chat as well for you to make comments and notes and your own personal thoughts. We probably won't look at the chat to inform the QA. So yeah, if there's something really burning question that you want to put there, put it in the QA. We won't ask you to read out that question. I, as the host, will make sure that I put these to the panel members. But yes, your active participation is absolutely required to make sure that you can get the most out of it. This is what we're going to be talking about today. Trying to understand how insurers actually rank road risk, what factors really matter. I think almost all of us have had car insurance or have applied for car insurance, and lots of different fields that you fill in. What are the really important things that matter? We're going to talk a bit about the highs and lows of telematics in insurance, black box policies, how prevalent they are, perhaps what they could be changed to do a bit more in the future. Look at around that gap that may exist around where insurers view risk and how road authorities view risk, and perhaps governments as well. And then yeah, let's have a look into the future and what could potentially happen. So I am going to stop sharing now, and I'm going to hand over to Sarah and Katie, who are going to be leading the presentation over the next half an hour or so. So Sarah and Katie, please do carry on.
I will. Let me hopefully get my screen sharing right. Right, I'm going to start. I think I'm going to go for that screen share. And then I do this. Hopefully.
That's right. Well done.
We're on. You can see the presentation. Hopefully you can still see me. I can't see you guys at the moment, but that's okay. Right, I'm gonna take a bit of inspiration actually from the conference in Birmingham a couple of weeks ago. I liked a few of the presentations went quite quickly. They sort of rattled through things, and I thought actually the pace for me kind of worked. So I've got a few slides to sort of introduce myself and my background, and I will sort of skip through at quite a pace. So, and then I'm going to hand over to Katie, who works sort of front line in the insurance industry and is going to give you some more detail on the telematics side of things. So, without further ado, who am I? This is a very quick whistle-stop tour through my CV. I did maths at university. From there, I started with a small consultancy called EMB at the time, now part of Willis Towers Watson. I became an actuary, a thing I'd never heard of until I was in my final year at university. So I'm a fellow of the Institute. From there, I joined AXA. This was my first sort of intro into the world of insurance. Did a bit of home insurance before I did motor, but they are very similar in actuarial terms. From there, I went to the AA. I only liked businesses with small names, mostly acronyms. And then I went to a company called Insure the Box. And that might start to give you a little hint as to what I'm doing here today and how I've got interested in road safety. So Insure the Box was, I think, strictly speaking, the UK's first end-to-end telematics provider. There were other telematics providers before that. But I left there in 2019 and set up Angelica Solutions, and that is my own consultancy. I think if I were an estate agent, I'd call it a boutique consultancy, i.e. it's small. In my life at Insure the Box, I was introduced to PACTS, and that's how I got to understand, I suppose, the potential link between insurance and road safety, because at Insure the Box, we always were trying to see how could we use the things that we knew about what causes road collisions to actually try and prevent road collisions. I've had an affiliation with Road Peace, which sadly is coming to an end. And then just a bit about me, very briefly. If I'm not working, I do like to exercise, and particularly triathlons. So I'm a vulnerable road user, as well as an insurance expert. So that was my whistle-stop tour through my CV. So the questions, so making sure I cover off everything that Richard has promised. The premium logic, how do we rank road risks and what factors matter? As Richard just said, I mean, I imagine most, if not everybody on the call is a driver. And so you've answered all those questions on a proposal form, on a price comparison site over the years, some of which might seem very relevant, so you can understand how when you passed your driving test might be relevant, some of which might start to sound a bit tangential when you get down to maybe your marital status and how many children there are in your household. But all of those things feed into the price calculation. So what are we doing with it all? If we strip it back to what are we as insurance companies doing? So when I say we, I'm a consultant now helping insurance companies, but what are we doing? We're selling a claims service. But what I've said in the past when I've given presentations maybe to graduates or people completely new to the market is, why is it difficult? Why is selling insurance different to selling baked beans? And the short answer is, well, we don't know how much it's going to cost to deliver that claim service when we quote a price. And perhaps the slightly longer answer or more nuanced answer to that is it actually costs a different amount for each and every customer to sell this claim service. So that's why I've got a job. That's what the actuarial profession does in general insurance, is try and forecast what the future claims cost is. So pricing, a key part of my day to day, is about estimating that future claims cost, which really is about risk. So the models, I'll show you a little diagram in a second, but the models essentially are trying to forecast the likelihood of a collision, the likelihood of a claim arising, given that you've had a collision, what is the expected cost of that, and that's, we in the insurance world do think pretty much in pound note terms, so about bent metal and about injured people, but we're looking at the cost of the claims in financial terms, and then we do try and make a profit out of doing this. So we forecast that. then we sell some policies, then people make some claims, then we look backward and see how much the claims cost, and then we go around the circle again. So that's what keeps myself and a lot of my colleagues in the industry busy. But starting to sort of build, okay, where are these potential links between the insurance industry and road safety? Obviously, from that list of things that myself and my colleagues are analysing, we're looking at the likelihood of a collision and the severity of that collision, which you can see as an obvious overlap with what some of you guys are doing in the road safety community. So coming back to the financial side again for a second, because let's say that with my insurance hat on, that is our primary objective, is to quantify these claims. So where does your premium go if you're a consumer and you're buying insurance? Where does your premium go? In round terms, you can look at this pie chart as about a third. And so the bottom right, the thing that we call accidental damage in the industry is what you might also hear referred to as own damage, so damage to your own vehicle. So based on the last 3 or 4 years worth of data, on average, it's just under a third, just about 30% of of your premium, is going on damage to your own car. And a little bit more than a third at the moment, on average, is going on damage to mostly other people's cars. So third-party property, that could be physical property. People do run into fences and houses, and it can also be street furniture and things like that. But mostly it's other people's cars. And then probably the bit that we mostly think about, if I've got my road safety hat back on, when we're thinking about people getting injured on the roads, we're mostly thinking about that top, in round terms, third, that is for injuries. And so about a third of your premium is going to cover the cost of injuries. And we as an insurance industry split that into small and large, basically, or what you might hear the terms attritional and large. So it sounds a bit glib when you're thinking about human beings, but that small thing, might be whiplash claims or just a broken arm, something like that. Whereas once you're into the large claim realms, we're looking at people with life-changing injuries or ongoing care needs and that sort of stuff. So we split all of our analysis into those categories pretty much. There's a thin slither on here somewhere for theft and a thin slither on here for windscreen claims as well, but that's basically where the money goes. I'm now about to get out some little tiny violins for the insurance industry. On average, we don't make tons of money, which may or may not be surprising. But this chart, there's quite a lot on here. I've pinched it from an Ernst & Young webinar. They're very good at doing results seminars twice a year to look at the industry results. And what this shows, if I give you a sort of super quick rundown of the chart, is you've got years along the x-axis, so from 1986 to 2024, and then the y-axis is our measure of profit, which we know is a combined ratio. So essentially, when if we're paying out more than 100% of premiums in claims and costs, on average, the industry is making a loss. And so you can see actually over the course of the last, whenever that is, 20 odd years, 30 years, most years on average the industry hasn't made a profit. An average hides a multitude of sins, so within that there's obviously lots of people who do make money and some others who make a loss, and the other reason that you can put the violins away is there are other sources of income. So this metric mostly looks at the premium and the claims that we pay out, but there is investment income theoretically that offsets some of this. So we don't just do it for fun, but yeah, as my headline says, we're not that great at this forecasting. We often get it wrong, and we are sort of driven by commercial pressures to try and sell business. But anyway, back to the things that you guys actually care about, and Richard's question. What matters from all that list of, I don't know, 20 or 30 things that you answer on a price comparison website? What matters? I haven't done a strict sort of ranking. I could have produced or found from somewhere a sort of a feature importance list from a modelling exercise, but so many things feed into this calculation. So the policy itself, the policy that you choose, in my diagram of where the money goes, I had about a third of it going on damage to your own vehicle, but of course actually you can, in theory, you can choose to buy third party only cover, but very few people do. You can choose the excess that you're going to pay in the event of a claim, lots of other variables. This driver info, so it's sort of in some kind of order, I suppose, and the things I've chosen to mention are amongst the most important. So age is a massive factor, and how long you've held your license. Actually, previous claims is definitely one of our biggest, most predictive factors, which is why everybody gets so annoyed that you think you've bought this insurance to pay claims, and then the minute you make a claim, your price goes up. But having had prior claims is one of the most significant predictors of whether you're going to have another one. The car itself definitely does matter, and quite a strong interaction between the car itself and the driver. So bigger, more powerful cars and young people don't tend to go well together. We spend hours looking at where you live, looking at your postcode and all the demographics around it. So yeah, an absolute myriad of information goes into this calculation. At some stage in my past, a previous boss of mine, if I move on to the next slide, claimed that there were probably more potential price points in our rating structure than there are atoms in the universe, such as the amount of time and energy that's gone in over the years to getting better and better at forecasting claims costs. Because we don't just build one model, some insurers, so we generally break things down by the likelihood of that collision happening and making a claim, so claims frequency, and then we look at the severity as well. We break it down by all those different types of claim that you can make. When it gets to injury, sometimes we break it into several different chunks to look at those difference between the small injury claims and the large. So that by the time you've done all of that, you can easily build, I've set up here up to 30 different models. They've got at least 20 variables. I think that's an absolute understatement, and lots of combinations within that that are chosen from this huge feature set. So like I say, that's what keeps me busy, but it does mean that we've got a huge amount of insight into how all of the features that we know about a customer before they buy the insurance, how that affects their likelihood of making a claim. I'll take a deep breath and hand over to Katie. Would you like me to keep sharing, Katie, and you just nudge me, or would you like me to swap back? Yeah, no, should we do that way? Yeah. Over to you.
So really quickly about me, I'm Katie Thornley. I'm the head of telematics product for Acorn. I've been in the insurance now for about 14 years across multiple roles, and Acorn is where I'm based at the moment, and dealing with partnerships with our telematics service providers. A little bit about Acorn. It was founded back in the early 1980s on a pretty simple idea that non-standard customers deserve great cover too. And over 40 years later, it's still absolutely at the heart of everything we do. We're now one of the UK's leading specialist insurance brokers, serving over 500,000 policyholders across car, taxi, van and home. From my own experience working for the group, it's empowering to see that those words are actually put into action. And we hear the taglines, especially including we want to make the road safer a lot in this industry, but it's not often you actually see it's truly practiced. So at Acorn, it's not just a tagline, it's the ethos behind every decision we make, from risk selection right through to the conversations we have with customers on a day-to-day basis. I joined Acorn back in 2021 when Acorn acquired Carrot. I'd been with Carrot for about 8 years across numerous roles, but Carrot was actually founded following the death of a young driver, and it's that's always stuck with me. And they had a very clear mission, and that was to make roads safer through telematics. When Acorn have purchased Carrot, that mission didn't change. If anything, it gave us the ability to really deliver on the original purpose, but with the ability, through underwriting capability, data infrastructure, and distribution scale, all within the one group. Most recently, we've acquired My Policy last year in 2025. So between the two, Carrot and My Policy, we've got two telematics brands now with expertise in your young and low mileage driver space, but then backed by a group that can underwrite, price and intervene in ways that smaller brokers just simply can't. And our ambition is to become the #1 non-standard insurer in the UK. Yep.
Okay.
I'll go. So a bit of history on the black box and the black box policies and telematics themselves. So before telematics came along, motor insurance pricing was a pretty blunt instrument, and young drivers were priced as a demographic and not as individuals. And if you're 18, obviously you paid 18-year-old rates. It didn't actually matter how you drove. And that can be frustrating for safe young drivers. And from a road safety perspective, it removed any financial incentive to behave well behind the wheel. We believe telematics changed that relationship, and from the mid-2000s onwards, insurers have started to collect real driving data. Initially, that was through hardwired black boxes, and it was predominantly used to price more accurately. But those early pay-as-you-drive models were relatively simple, and they were focused on mileage and broad risk factors. But the direction of travel was always clear, and behaviour should matter more than birth date. So for young drivers specifically, it was a big deal, and they faced the highest premiums and the highest accident rates. But telematics can give safe young drivers a way to actually demonstrate their risk in real time and be rewarded for it. And that matters from a safety perspective because it creates the direct and tangible link between how you drive and what you pay. And what we've built at Carrot takes that even further. It's not just about pricing, it's about using the data to actively engage drivers, and it highlights risky behaviours and supports safer outcomes. And how we see it is the pricing is the incentive, but the intervention is the change. Yeah. So on here you can see the different customer segments where telematics can be used, and young driver telematics is the most established use case here in the UK, and it is where the safety evidence is strongest. However, there's more to do. Simply at its core, telematics is a behaviour monitoring tool, and behaviour is relevant across almost every segment in the market. So low mileage drivers, for example, are an obvious next step. Someone driving 3,000 miles a year is fundamentally a different risk to somebody driving 15,000. And what telematics allows us to do is let's price and engage with that accurately, rather than just relying on them to self-report mileage, which we know isn't always reliable. For high risk over 25s, this segment is equally interesting. Is older drivers who've accumulated convictions, claims history, or license restrictions are often priced out of that standard insurance altogether. With telematics, that gives them a route back in and gives us the data so we can actually manage that risk responsibly rather than just declining them. Pay as you go, that's one that can open up access for people who only drive occasionally. It is a growing cohort, and particularly among the younger generations, as car ownership patterns are continuing to shift. But there's so much more. I think you can go wider than this. You fleet operations, taxi, private hire drivers, older drivers managing age-related risks, learner drivers building history before they've passed the test. It's essentially any segment where behaviour matters and data can drive better outcomes is a candidate for telematics. And it's the technology that's the constant, and what changes is how you apply it and the safety outcomes that you're actually trying to achieve from it as well. Yeah. So this slide just shows how far we've come with scoring. As you can see on the left, the traditional pricing was built on factors like age, postcode, vehicle type, and even through early telematics scoring, you're looking at your broad factors of your harsh braking, acceleration, and speed. But moving to today, we're looking at your behaviour events, the speeding, your acceleration, braking, cornering. But phone usage is a fast up and coming scoring element, and it's something that we know through the demographic, especially with young drivers, it's one that really needs to apply focus. We've also got, you can have fatigue indicators and even weather and road type through there. And it's kind of moving to that real behavioural data, and it makes that the modern telematics so much more powerful and fairer as well. Is this one with you?
I know it's got my branding on it, but I think I don't know if it's a placeholder. Should we skip on to the next one?
Yeah, it's kind of much of the same, that part.
Yeah.
So then, just to look at the device landscape itself, even over the last 10 years, the difference in device is huge, and it does actually, the choice of the device actually matters more than people might think. It has a real implication on the quality of data, the customer experience, and the safety outcomes that you can deliver through the device. So just a bit on them individually, you've got app only, which is probably now the most common entry point, and this is one that uses your phone's GPS and accelerometer. There's no installation needed. It's onboarding is really frictionless. The trade-off with that, though, is that it depends on the driver actually carrying their phone and the app running consistently in the background, which isn't always a given. You then move on to app and beacon, and that just takes it a step further. You combine in the phone's GPS with a small Bluetooth device in the car, and that confirms if the driver is actually in the vehicle and does improve journey detection accuracy. It is a useful middle ground between convenience and data integrity. OBD, that plugs directly into the vehicle's diagnostic port. It captures richer vehicle data set, but that's alongside the driving behaviour. It is more intrusive to fit, and it's easy to remove and not necessarily compatible with all vehicles. Just to move on with the windscreen and hard fitted, these are dedicated GPS devices, and it's rather than relying on, it doesn't rely on a phone at all. So that means it's more tamper resistant, better suited when data integrity is non-negotiable. But from a road safety perspective, the device that produces the richest behavioural data and drives the most engagement is the one that delivers the best outcomes. And app and beacon are quickly becoming the dominant model for young drivers for exactly that reason, improving the engagement. But engagement alone isn't enough. And at Carrot, we deliberately continue to invest in a more expensive dedicated GPS device. And that's because the data means better risk identification, earlier intervention, and ultimately safer drivers on the road. And for us, that's the whole point. Yeah.
Sorry, I think I've pressed something. There we go.
Okay. And then, yeah, just on here, we can see that this covers the risks that matter the most in telematics. And to be honest, these aren't just commercial risks for insurers. Each one represents a real road safety challenge as well. So to start with speeding, it's the clearest example. It's the single biggest predictor of both accident frequency and severity, and it's disproportionately concentrated in the younger driver segment. Telematics gives us the ability to identify those in near real time and actually intervene, something that other insurance products wouldn't be able to do. Distracted driving, is arguably the fastest growing risk on the list. And this is all down to smartphone dependency among young drivers, and it's not going away. Detection remains a genuine technical challenge with device level data, and I think this is an area where the industry really needs to invest more, and where collaboration with road safety organisations could make a real difference. Delivery driving, this is a misclassification that's grown significantly within the gig economy, and that's drivers operating under the wrong usage category that it's not just an underwriting problem, it's also they're unaware of their gap in cover as well, and they're unaware then that creates that real vulnerability at the point of claim. Modifications and device tampering, they're both essentially integrity risks, and they undermine the data that makes telematics work. So where the data breaks down, so does our ability to identify and respond to any unsafe behaviour. And then for a severe incident exposure is essentially the consequence when all of the above goes unmanaged, and young high-risk drivers involved in serious collisions generate those complex, costly claims, but more importantly, they do represent real harm on real roads, and that's what we're all here to prevent.
Yeah, thanks, Katie. So Katie's a bit of the exception, or Katie and Acorn are a bit of the exception, I think. So I've got a few slides now and say why has it been so hard, or is it so hard to get insurers to the table? Yeah, when seemingly we sort of do two sides of the same coin, right? We've got all this huge amount of insight, but maybe the obvious and immediate answer is, well, yeah, the insurance industry that we said right at the outset, you know, we're here to sell a claim service, and essentially exist to pay claims. And actually, if claims frequency goes down, which is really what you know, improving road safety means, the industry doesn't really make any more money, because generally we work out the cost of the risk, we add a margin to it, and we charge consumers for it. And so if claims frequency goes down, we don't necessarily increase profit. And in fact, if you really want to be sort of negative about it, I mean, imagine a utopian world where there were no crashes, then insurance companies wouldn't have anything to do. I think we're a long way from that. There are plenty of other risks to insure, but it can, low premium business, actually, which is potentially what would happen if risks reduce to very little, makes it very hard to make a profit. So that's the sort of first point, is it's not obvious that insurers should really invest in reducing collisions. But why should we care, and why do companies like Acorn care? That volatility, so the very last point that Katie made actually about those huge claims, I mean, it's shocking really. Some I don't know to what extent any of you guys on the call are aware of this, but you know, some of the large claims that a young driver can give rise to, and it typically is young drivers, you're talking about, you know, £20 million that go to pay the victims of those claims, and that's huge. You know, if you're a relatively small insurer, covering, you know, even just one 10 or 20 million pound claim is very difficult. So reducing that volatility and getting rid of those very large claims and bringing it back to more of the bumps and scrapes side of things is definitely beneficial. So any intervention we can do to reduce catastrophic loss should be something that insurance companies care about. And of course, competitive advantage it's an advantage by definition. So if insurer A can reduce the claims frequency of the customers coming to its business, and still charge something close to the market premium, then that is an advantage, and that we should be interested in. So we've just seen, or at least heard, the potential for telematics, that the interventions that Katie alluded to can improve driver behaviour and reduce claims frequency. So why has it been sort of resolutely, stubbornly stuck at something like 5% of the insurance market for the last 20 years, pretty much, where it sort of grew to that 5% and then got stuck there? I put some numbers on a page just to give you a sort of rough idea, and I guess some of the short answers come back to those devices that Katie just showed. So we have to spend money on all of that, and then actually the customer, this sort of third to last line. Customers don't like being tracked. So actually, if we offer them a telematics product that we as an insurance company have potentially paid, I mean, I put in the device costs, there's a huge range. Katie probably correct me on this, but when it first started 20 years ago, you know, we were up at £200 for a device and a fit, and and the data transmission probably even more, which is why Katie mentioned the apps a lot, that actually anything that reduces this device cost line helps us get access to a wider customer base, but the quid pro quo is the data quality isn't as good. But then this sort of third to last line here, the customer demanded reward. Customers expect to get a reduction in premium for taking this technology. So basically the economics are really hard to make telematics work. So that's the short answer as to why it hasn't really taken off. Katie, did you want to say a couple more words about why Acorn are different?
Yeah, so just on Acorn and what we've been focusing on for, in particular, the last 12 months, we've really been trying to push our involvement in road safety, and it goes well beyond the products that we sell. So over the past year alone, we've sponsored and raised close to £75,000 across road safety causes, and we're proud to be working alongside some of the most respected organisations in this space. We've got Project Edward, which is obviously every day without a road death, and they align closely with what we're trying to achieve through telematics, because the goal for us isn't just fewer claims, it's the fewer casualties. Break more recently we've partnered with them through My Policy, and it's the UK's leading road safety charity, and their work on education and campaigning and victim support reflects exactly the outcomes that we care about. And then there's Bobby Colleran Trust, and this trust was founded following the death of a young child, and it's focused on child road safety education, and it's something that really sits particularly close to the heart of why Carrot was built in the first place. So these partnerships for us matter because they hold us accountable to something bigger than a loss ratio, and hopefully this audience understands better than most that the data we have and what we collect has real world consequences, and we want to be a business that takes that seriously, and these organisations are certainly now helping us to make sure that we do.
Thank you. So I suppose I'm hoping to try and encourage more insurers to come to the table and take the stance that Katie and the Acorn Group are taking, because I do see real potential for the industry to help more. This data that we've got, not just the telematics data actually, but all that pre-collision information, and all the information on the many millions, thankfully, of people who don't have a crash every year, or any year, in fact. So I'd love to see insurance companies being willing and able to share their data. At the aforementioned Road Safety Conference in Birmingham a couple of weeks ago, I was delighted to see a sort of update on the potential data piece. I think this is coming out of the new road safety strategy, so the Prana database, which is going to try and link more about the Stats 19 data, or from the Stats 19 data to NHS outcomes data. But if you see this as a timeline, we're still in the right, collision has occurred. What are the circumstances of the collision, and then what are the consequences for the people injured? But insurance companies have tons more data about the collisions that maybe didn't make it into Stats 19, or didn't cause an injury, and so I think you can consider those as almost sort of near misses. We do that a lot in the telematics world, that you can see high G-force events, harsh braking, and they don't all result in a collision, but the more somebody is having high G-force events or producing high G-force events, in the end they are much more likely to have a collision. So we've got insurance companies have got all this data that you might consider to be near misses. We've got a load of data on costs, a different perspective on costs, but nonetheless a lot of data on it. And then the bit that's got the green dotty line around it is about what I've called the collision signature. So if it is a telematics policy, so the first 2 points I've made, a non-telematics policy can provide, but if it's a telematics policy, you should also have lots of information in the run up to the collision about the G-forces that the car has been subject to. And then even before that, I think this is sort of, okay, where it gets potentially really interesting is going back another step in the pipeline and saying, well, we can say lots more about that driver and about the demographics, their circumstances, and their history as a driver, way before they got to the point of collision. So that's all the exciting data. I said I'd skip through things and be quick, and we're getting close to, or if not slightly past, our target time. So why don't we do that? Yeah, I've tried both on the inside and the outside of an insurance company to get data sharing to work, and it's point 3 on this slide, but it's painful. Insurance companies see it as both intellectual property and commercially sensitive, but also they have a lot of concerns in the post GDPR world and data security concerns. So, and it's just not a priority for them to try and work through those concerns. Anything anybody could do to give insurance companies confidence in sharing data would be great. And then the first 2 points about, Katie talked about the potential for telematics, and I've said it's sort of resolutely stuck at this kind of, maybe it's 5, 6, 7, 8% of the market. Helping on the cost front would be great. And then I think for some groups, if it was mandated, obviously that would get telematics into more consumers who could benefit from it. And it also avoids the passing on problem that one of the actions that a lot of telematics insurers take when they see a very high risk driver is they cancel the policy, which is obviously great commercially for that insurer, but not so great for all of us from a road safety point of view. That is it, Richard. Have we done all right?
You've done more than all right. Very well done. Thank you both. I mean, that was genuinely insightful. I hope he has learned an enormous amount about how insurance, whether it's going to help me reduce my next premium, or more importantly, my son's next premium. Sure. But I wanted to start off the Q&A now. We've got a lot of questions in the chat. We may not have time for you to answer them all. Let's see how many we can get through, and if not, I'm sure you guys can just pop a quick response in afterwards. But I think there were some points that you mentioned there at the end, Sarah, which definitely lean into something that Jamie is very interested in, which is trying to help work with government legislators to try and improve road safety. That I know that he's interested in. I mean, Jamie, I'm interested particularly in your thoughts on that, some of the suggestions from Sarah at the end, and whether there's anything that you can mention in terms of the work that you and PACTS are trying to do around this area.
Yeah, so I've set up a round table, and it's sort of on the role of insurance and protecting young drivers, because it's something I'm sort of particularly interested in. And if I get a bigger room, I'm going to invite Sarah along. So Katie's already on my list, but having met Sarah now because of this, I'm thinking, oh, she should be there as well. And that's what we want to explore. Is it the government said it's not going to have GDL? I'm thinking actually with insurance, with new technologies, there's a massive potential in here for insurance companies to be doing more if we've got the right incentives to go along. So I know sort of particularly young males would rather pay an extra £300 than be tracked and monitored and controlled. But we know that they're the biggest risks. So, should we be mandating black box technology? And the other thing I'm looking at is, well, do we star rate this? So if you pay your money, you drive like an idiot, that's a 0-star rating for an insurance product. If you've got proper black box that are fitted and good feedback to that driver and stuff like that, the sort of stuff that Katie's offering, that should be the highest one, sort of thing. But I think there's new technologies out there, so especially in the commercial world, where they've got inward and outward facing cameras. They know if they're on the phone, they know if they've got a seatbelt on, they know if they're close following. I'm just thinking, why don't we do that for young drivers? Why isn't that part of an insurance product for those high risk ones, where we spend more money on the preventing and less money on the sort of reinsurance when those really bad things happen, sort of thing. But I think like Sarah flagged, is that actually we've got to incentivize that. We've got to somehow get government to say, well, actually, what we should be doing is taxing on the rubbish ones and doing relief on the really good ones, or something like that, or how do we actually make that happen?
Yeah, I think there does need to be a clear mechanism, but it is going to have to be led by government, isn't it, Sarah?
Well, it's really difficult, to get insurance companies to lead it. I think that's the. I've read a couple of things recently. There was a specific coroner's report that looked into the death of a couple of young people caused by a young, very newly qualified driver, which isn't uncommon. And it talked about that it recognised the potential for telematics, and then said, well, actually, the insurance industry needed to do better at promoting telematics and encouraging people to take it. But that is a really hard ask, and especially if you look at those sort of the kind of macro position on it. If it's only about 5% of drivers, it's easier for most insurance companies to just say, I'm just not going to do it. So many insurance companies just don't do the young and the high risk, and that's the easy way out. So if it doesn't come from government and isn't mandated in some way, it's very hard to make it industry led.
Okay, right. I should turn to the chat. We've had a couple of questions that are around sharing of data. So Peter Barnett mentioned around, does anybody share telematics data with highway authorities, especially Vision Zero teams? Then Tony Burden also asked, at the simplest level, is there a national database that holds all motor insurance collision claims? And in principle, is there any this data couldn't in theory be shared in some? Do either of you, both of you perhaps, want to mention what is available, what is collected, and what barriers may be in place towards actually sharing?
Katie, do you want to go? Or?
I don't mind. Yeah. So, I think Sarah touched on this in the presentation. When it comes to sharing the data, there's so much trepidation about what to share, how much to share, and there is a lot of that data there, but it's also how that is interpreted as well, and how it can be it needs to be used correctly. And I think we have the data, and we do, but it's understanding who would want it and what they would want as well from us, and that's kind of the place that we get stuck in quite a bit.
Yeah, I mean, there are lots of different providers of information about who's traveling on the road networks. You mentioned mobile phones. We've all got mobile phones. There's lots of companies that are tracking us and selling our data. If you don't read the terms and conditions, that's your fault. So I imagine, I've seen people that have got GPS-based harsh braking data, for example. I suspect that people would be most interested in actual events that are happening. I mean, is that ever likely to happen, or are people just going to get scared with GDPR?
I mean, it definitely gets talked about, because what there is, to pick up Tony's question, there's an industry database of collisions, but actually we use it to check if you say you haven't had a claim in the past, we use it to check whether you have or not. But that doesn't store all the data that really you would want in this scenario, because it doesn't have. If what you're trying to say is, okay, what causes collisions, and I need to understand a driver's age and their license years and all that sort of stuff. The Q database, as it's called, CUE, it doesn't have all of that. So there's something there, but we use it for fraud control, basically. Could we end up in a position where things get shared? In theory, GDPR sort of served as something that should have helped, in that technically your data is portable, and so if you've had a telematics policy, you can request from your telematics insurance company all of that data, and there was some thinking that might be part of a catalyst to allow you to go. So if I'm currently insured with the Acorn group and I want to move across to the Admiral group, that I can take with me my 5-star rating, like my Uber rating on my, I don't know, whatever other ratings I might have, but that hasn't happened. And I feel like it's one of those things where there's not a first mover advantage. So the current space in telematics, right? There's 2 or 3 providers who've been huge for a long time, and then there's a sort of long tail of very small people. But actually, for that database to be great, if actually we did all have, in the same way that we've all got a credit score, if you had a driving score, you could port it and take it, and it would just be looked up. But at the moment, the industry, nobody's making that first move. So unfortunately, we don't have it at the moment, but I think it could. It gets talked about.
Yeah, I think related to that as well, you talked about the star rating. I mean, Keith mentioned in one of the questions about feedback and how quickly people can get scores, and whether that actually impacts behavior. I think you mentioned lots of different risk factors that are the highest risk factors. Is it that makes the driver engage on their behavior? Is there any evidence about what it is that they need to know, and can it actually make a difference in what they do?
For me, it's about it being personalised. The more personalised it is, the better engagement you get. The generic watch your speed, watch your cornering. If I said to somebody watch your cornering, they won't know what I'm on about. You have to break it down and make it realistic for them. And it is very much real time as well. And that's where the apps come into play. And you can obviously link the app with any device, so it doesn't have to be an app only solution, but making that near real time and personalized feedback is where you will get the engagement, and especially for young drivers, because they have to see it here and now. And it's kind of, you have to do it in a way that's personalized, because everybody thinks they're a good driver. Nobody will say, hands up, I'm a bad driver. So you can't go in going, your driving is awful, look at this, You have to show them the examples of it and educate them, as opposed to tell them off.
Right, I see. So that would be on this journey, in this location, you did X, Y, and Z.
Coach them, yeah. It's about coaching, and for young drivers especially, they don't have prior experience. This is their first chance at driving. So really working with them and helping them, instead of pointing the finger when they do something wrong, and just issuing out a warning or a cancellation as soon as they get that one event, won't make the change. And to Sarah's point, that will just pass the problem on to somebody else. It's spending the time to work with them and getting the early indicators of risk, as opposed to when it's too late.
Fantastic. Jamie?
I was going to say about, actually, we're not told what makes a good driver. So I downloaded one of these insurance apps sort of several years ago, and for the week that I had it, because it was going to tell me, give me a rating, and I thought, right, for the week I'll drive really well. And I got my score back, and it wasn't that good. And I was just like, this is outrageous. They don't know what a good driver is. And then I started thinking, actually, I live on a road that joins a 60-mile-an-hour road, and I tend to accelerate out quite fast, and I brake quite heavily coming into it. And I was just thinking, okay, perhaps I should have driven down the road to the roundabout where I could have joined at a much slower speed and things like that. And I was thinking, you know what? You don't get told what makes a good driver, or what are risky potential scenarios and stuff like that. So I think that sort of feedback to drivers is really good, because especially when I was a young male driver, it was about, well, how fast can I go around the corner? If I can go around the corner really fast, I'm a good driver. And for an insurance company, that's not a good driver. You're going too fast around that corner. And I think that's what we're sort of lacking, and that's why I really like the idea of rating drivers, because we've got this thing what says, is it 80% of drivers think they're better than average, and you're like, that's not how statistics work. So who is a good driver, and why? Yes, you want to be a racing driver. Okay, be good at that. But actually, as a driver on the road, this is what it means. This is where your risks are. And I think that's what we're missing, some of that feedback to inform drivers to say, right, what we're really looking for is this, this, and this.
Yeah.
And I think that feedback is developing over time, especially in the app world now, that leaderboards, gamification, streaks, all of that, and that where it will show you, and you can see the evidence of what good looks like, as opposed to just what your personal feedback is as well. And it's the incentive to keep going, and it's gamification seems to be the way that's definitely working.
Jamie's definitely brought us into the area of safe system. Thank you. So we've talked about star ratings for drivers. we didn't mention about star ratings for vehicles, but you did mention, Sarah, that, safety information about a vehicle definitely comes into it as well. I was thinking about the next star ratings, and many of us are aware of our IRAP star ratings. Do insurance companies care about how safe the roads you drive on are? So would they look at previous collision history on roads that you've travelled on? Would they look at whether they are set to safe speed limits? Like if you live or drive in 20-mile-per-hour limits, then we know that collision risk is lower. Does anybody do any of that stuff?
I mean, yes is the short answer. I suppose we use road type quite a lot, and again, even in the non-telematics example, we would look at your postcode, and we'll look at the types of roads that might be around you, so the density of specific road types, and we do use Stats 19 a lot to look at. Okay, so yeah, we love it. So you say whether collisions occur. Yeah, definitely. I've calculated, several times the number of collisions that occur within a 5, 10, 20 kilometre radius of your home postcode. But that's the sort of the non-telematics companies only know your home postcode and then are sort of proxying around it, whereas the telematics pricing world can look at the roads that you drive on, and for all of that user behavior, look at the type of road, so the classification, the speed limit on that road. Certainly in my times, being sort of trying to improve that telematics algorithm, sort of what is risky versus non, would have loved to have got at better data about the rest of the road features. So lighting, is it on or off? I don't know, the signage, are there solid white lines in the middle? All those things, right? That actually those databases, I think, in my experience, were harder to find. So if we had, so what you need as an insurance company is you need all that stuff captured in Latin longs. That you can take all your driving data and then attach to it everything that you could possibly imagine about the road, and then from that you would be able to say what is a risky road as well as what is a risky driver.
Wow. Okay, I've got some great ideas on that one already. One other thing that's come up in the chat is around, we talked a lot about young drivers. What about older drivers? Are older drivers being offered telematics solutions? Are the insurance industry worried about older drivers? Is this a potential area?
My first answer would be, come back to that economics, the numbers I flashed up on the screen, is that it's not been front of mind for insurance companies. All the while the costs of the devices were high. I mean, the typical average premium for an older driver, I don't know, somebody over 75 or 80, it's probably only about £200 or £300. There's not a lot of margin sitting in that to spend on technology. And the other joke I tend to make is if we thought it was hard it's getting a 17-year-old to change their behavior, you try getting a 70-year-old to change their behavior.
I hadn't thought about it from that perspective, but it is interesting that obviously these are commercial companies that are there to make money or to lose money, it seems from the charts. They are always going to be driven by those commercial pressures, and perhaps we don't always recognise a lot of that. Right, we've run out of time, and it is lunchtime. So there's a whole bunch of questions and things mentioned in the chat. If the presenters would like to at some point review that chat at the end and put in any comments on there, that'd be great. I think your contact details did flash up at various times. Feel free to put those in the chat. I think there's a number of people that wanted to reach out to you as well. So thank you all for taking part. That was, as I said, genuinely insightful. This could be something we revisit again next year, given that it's got a lot of thoughts going. We're always looking for suggestions. So if anybody on the call does have a suggestion for future webinar topic, already that would be fantastic. We will be emailing everybody a list of some of the webinars that are coming up in the months ahead. So yeah, thank you all for taking part. Thank you for making my job as a moderator and a host really easy by providing great content and a whole bunch of questions that I couldn't even get through. So yes, thank you all, and please do enjoy the rest of the day and the week.
Thank you.
Brilliant. Thanks a lot.
Bye.
Bye.